Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 30th of August and we have a brand new guest, Jiang. He's the head of equities at First Plus Asset Management, coming to us out of Singapore. Jiang, good afternoon and great to have you on the show.
Hey, glad to be here, Brian. Thank you.
Now, Jiang, before we get your insights, we're going to take a look and see how regional markets have performed. But first of all, we're going to start with Bitcoin. Bitcoin has had a rally in the last couple of days. It's up 5.32% at 27,440. Ethereum is at 1,719. It's up 4.14%. Looking across the regional stock markets, we will start first in Singapore, where you're at, Jiang. The Straits Times Index is up 0.14%. We have the KLCI, which is up 0.18%, Shanghai, which is up 0.05%, the ASX All Ordinaries, which is up 1.31%, the Nikkei, which is up 0.54%, the Hang Seng 0.62%, and rounding up the numbers, we've got the Kospi, which is up 0.47%. Now, it's been a while since we've had a sea of green until this week. Now, Jiang, tell us why.
Well, thank you very much, Brian. So I think today there has been a bit of a market optimism regarding some of the situation that's developing in China, and I think as you probably know, the two indicators that could potentially lead to a potential stimulus measures out of China. One would be the cutting of the mortgage rate and also the deposit rate. And another one would be the government's pledge of increasing fiscal spending. And this is something that the market has been largely looking at. But as you look at the market midday action, some of the action has been pulled back a little bit. I think for China, there's still a bit of an uncertainty regarding how the fiscal measure can be played out and whether how effective are the consumption-oriented stimulus would be. It remains quite unclear at this point. So I think, yes, we did have a very good open, but again, very uncertain market going forward.
And then in the medium term, how should investors be looking at China really? There was a lot of optimism at the start of the year. Then we had the slew of bad news month after month out of China in the last few months. But then looking ahead, are you an optimist or a pessimist?
Well, Brian, I think this is a very good question, and I wouldn't really, consider myself rather an optimist or a pessimist. I think for a investor, we have to look at things very holistically. I mean, granted, yes, the Chinese economy is very weak. If you just look at some of the headline numbers, the CPI and the PPI numbers clearly points to a deflationary environment. And then when you look at some of these youth unemployment numbers, specifically the youth unemployment numbers, it comes out at 20%. But if you look at the total youth employment, it could be as much as, say, 46%, right? And then there's anecdotal evidence pointing to some of those younger grad, which is potentially facing 80% unemployment rate. So yes, the overall picture is probably not that optimistic. But I think, from an investment perspective, investors should be at least selective when it comes to investing in China, because at the end of the day, it's still the second largest economic state in the world. And within China, I think there are some of those sectors that we're quite positive on. So one would be, so I guess the way you frame it would be, we're looking at some of the themes that could potentially invest in China. One would be the export themes. And by export, what I mean is you're either exporting a Chinese product or exporting a Chinese business model. And then another thing that we're actually focused on is the technology transition or the technology upgrade theme. Because at the end of the day, China remains one of the largest consumer market in the world. So any company, whether it's Chinese company or companies outside China, that can capitalize on this consumer, we think they are the beneficiaries.
Those are interesting themes. Are there any specific stocks that basically then ride on those themes that you would like to highlight?
Well, so there's one company that we're actually quite positive on, and it's Pinduoduo. So it's one of the leading Chinese e-commerce companies. So just going back to the theme that talked about whether it's exporting a Chinese product or exporting a Chinese business model, I think Pinduoduo is one of the few companies in China that has really successfully exported both components out to the out globally. So one thing we like about Pinduoduo is that, so when we look at the company's domestic business, it's a clear beneficiary of China's consumption downgrade trend. And the company reported a very good earnings last night, which clearly showed that it can hold against some of the larger competitors, such as Alibaba and JD or even TikTok. But I think we're more positive on Pinduoduo's international aspect of it. So specifically, what I'm referring to will be Temu. So when you look at Temu, it's one of the few global Chinese brands out there besides TikTok that has really captured the mind share and the wallet share of the non-Chinese consumers. Temu has been growing exponentially in the US and Europe, which is a very, very hard market to crack. And recently, has just entered the Philippines and will most likely expand throughout ASEAN before the end of the year. So we really do. So long-term speaking, we're actually quite positive about the stock because of the fact that it can capitalize on the value proposition for the global consumer base.
Now, Jiang, are there any foreign companies that you like that perhaps then ride on those two themes that you talked about?
So within some of the foreign companies, I think when investors look at foreign companies, they look at some of the larger companies that can capitalize on the Chinese consumers. But I think one thing about our investment style is that we really look down at the market cap chain and look at some of the small caps and some of the small and mid caps that might be overlooked. And recently, we actually quite positive one company called Navitas Semiconductors. So Navitas Semiconductors specializes in a very niche area of power semiconductor. So and their biggest product, one of the key products, is the power IC chips that essentially make your phone chargers to charge faster. So if you have say a Xiaomi, or if you have a Xiaomi or a Huawei phone charger, or maybe like a MacBook phone charger, chances are it will have a Navitas chip within them. So at the end of the day, so when we look at Navitas, at the end of the day, China remains one of the largest smartphone markets in the world, and also the largest consumer electronic market in the world. And within this market, we see a structural transition from the traditional silicon chips that powers your phone charger and your electronic chargers to more of a gallium nitride charger that's actually built by Navitas. And the thing that we like about Navitas is that it is the only company that figured out the secret sauce of making your phone and electronics charge faster relative to some of the other players. So yes, we do think that this is an emerging leader within the power semiconductor segment. And another added benefit, I would say, is because of the fact that there is a scarcity value for a niche leader like this, we really do believe that some of the larger players could potentially pursue some sort of like an M&A angle when it comes to Navitas, just to roll this business into their broader product portfolio.
And that sounds like a very interesting stock that I'm going to do a lot more research on. Jiang, thank you very much for your insights. Thanks for coming on the show.
Thank you very much, Brian. Glad to be here.
Now, we've been speaking to Jiang. He's the head of equities at First Plus Asset Management on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.